Hey guys, how's it going? Lee here. So now on to number 5. That's right, number 5 of 100 in the series ASX 0 to 100. And in this one, we're going to be covering one of the requested companies in Fortescue Metal Group, or FMG. Now, their biggest breakthrough was finding one of the largest bedrocks of iron ore in Australia in 2004. So without further ado, let's get straight into the business model and how they actually make money. Now for FMG, that's rather simple. They extract iron ore and then ship it essentially over to China. And just to clear things up for those who don't know what iron ore is used for, it's essentially used for anything that requires steel. So think of buildings, think of infrastructure, think of basically anything else that requires a rigid structure. Now, given the demand for iron ore over the past decade, yes, I know there were peaks and troughs in the resource sector, which, everybody knows there is. In the past 2 years, iron ore prices have gone quite high, especially with the demand over in China, which obviously FMG has benefited from. Now, my issue with the resource sector or businesses within the space is that they're highly dependent on whatever the market price is for the commodity that they're providing. And luckily for FMG, the price of iron ore has gone up in the year of 2020 from $91.50 per ton to $163.73 per ton. All of which in the midst of a pandemic over in China. And now if you're looking at reports of the resource sector, it's very important to understand a couple of metrics. And one of them is how much it actually costs to extract the iron ore. And to find that out, FMG actually looks at two metrics. That is the cost for the wet metric ton, which is when they actually extract it from the ground, like it's been extracted and it's wet because there's a lot of liquids during that extraction. And so after the extraction and after, removing and extracting all the liquids from the wet metric ton, we then move on to the dry metric ton, which is being shipped off. And there's obviously cost involved in shipping it off and removing the liquids and whatnot. And so we want to figure out how much the delivery cost is in total. That is from extraction from the ground, extraction of the liquids, and then delivering the delivering the goods over to the buyer. And once you figure out that and how much the buyer is buying it for, that's where you're going to get your margins or figure out what your profits actually are. Now, I hope I haven't lost any of you guys there in that metric talk, but yeah, it did my head in a bit myself trying to figure it out. But essentially, I was rather surprised at the profit margin that FMG has. Because when you look at big business models, you think that it operates in larger volumes. Larger volumes means smaller margins. Generally, I'm thinking of Woolworths, I'm thinking of Coles and whatnot. But actually, it's at a big old 65% margin. So the margin for these, the iron ore is actually quite big. And I actually had a look around and the margins are actually also quite big for their other competitors like BHP and Rio Tinto. And with that being said though, let's get straight into their financials. Just looking quickly at their annual report, the revenue is sitting at a nice cool 12.8 billion USD, which is 29% higher than last year, totaling at 178 million tons of iron ore shipped. Their net profit after tax was 4.7 billion USD, which was an increase of 49% in comparison to last year. Now just think about that. We're talking double digits, and we're not talking like the 10s or the 20s. 49% increase in their profit in one of the oldest business models you can think of. That just shows you the level of volatility even the resource sector has. Like everybody talks about volatility in tech and, buy now, pay later. But look at this. This is a resource sector, one of the oldest. You're not going to see this type of volatility even in bank stocks generally, unless you've got a pandemic or something going on like that. But yes, 49% in comparison to last year. You can see why the share prices have surged. It'll be very interesting to see whether this continues next year in 2021. Well, this year in 2021. And as for the balance sheet, well, it's not ideal and not the best. It is getting better year over year based on their reports in 2019. Because what we see here is that they've got a lesser net debt position from $2.1 billion to $258 million, which is a change of 88%. That's right, 88% reduction in net debt position. Now, although I'm not a fan of a lot of debt, as many of you guys would know, I'm looking at it from a year-on-year perspective. And based on the fact that they had decreased their debts by 88% in 1 year period, and if 2021 looks to be just as good as 2020, if not even better, then I can imagine that that balance sheet is going to be much, much more attractive. But again, I can't say this with excitement, with confidence or anything like that, because I still have personal reluctance in relation to the resource sector, which leads me on to their outlook. Now again, to nobody's surprise, this space is rather volatile and really depends on the supply and demand of the given resource at X given market price. Now, another reason why I don't like the commodity space is for the following reason, and maybe for some new investors, this might be new to you guys. So the commodity space is for what they call price takers. So which means that ultimately the individual or the company, like FMG in this case, has to take the prevailing market price. And, demands can be high or low, supply can be high or low, and I can see the price for the resource dip much, much lower depending on the market conditions. In contrast though, if we have a look at companies just like Apple who are price markers, they have influence over the market price. For example, when they set their flagship iPhone at, $1,000 or whatever, and if people are willing to pay $1,000, it sets the precedence for other companies to set their flagship devices for also $1,000, and then therefore raising the price no matter what, because now we have mentally our mindset at $1,000. The next year they could put it up from 1,000 to 1,100, and people want the device, which creates a demand. So therefore, Apple are price markers, as opposed to the people who provide them with the resources to make the iPhones. They would be price takers. So there's a quick lesson in business as well. I hope they teach that type of stuff in university. Anyways, so for that reason, I'm really not as keen on the resource sector. Although there are periods of growth, there are also periods of really, really big slowdowns. And for that reason, I'm really not into the resource sector, because it doesn't take much for another competitor to come in from another country overseas where they strike a deal and provide the iron ore at a lower rate, because their labor rates are much lower. The cost of operation is a lot lower, which puts FMG in a really, really weird place. They either have to find another seller who's wanting Australian iron ore in particular. Not sure if there's a big difference. Iron ore is iron ore from my understanding. But yes, having looked at their annual report and a couple of the interviews, I think Fortescue is in a rather good place. I mean, Twiggy's established great relationships over in China. Whatever you may think of that, whether you like it or not, they've done very, very well in managing their net debt position over time, and obviously have a great relationship with a buyer that has lots and lots of money with lots more room for growth in terms of infrastructure, and they're going to need a lot of steel to make it all happen. So whether they deliver more or less iron ore, I really have no personal interest or opinions on that moving into the future, but I think they will continue to do rather well. And for those of you guys who were invested or have been invested in FMG, congrats. Hope you guys, don't sell out or have done something cool with the dividends. I don't know if you've reinvested or whatever the case may be. If you do own FMG shares, let me know in the comment section down below. Let me know your thoughts on, the whole share price going up drastically in the past couple of weeks or so. But that's it for me, guys. I hope you guys have a great rest of the week. Catch you later in the next one. Cheers.